Hey everyone, and thanks for jumping back into the Cryptoverse. Today, we're going to talk about Bitcoin, and we're going to talk about the total summary risk, which is based on price metrics, on-chain metrics, and social metrics. If you guys like the content, make sure you subscribe to the channel, give the video a thumbs up, and also check out the sale on Into the Cryptoverse Premium at intothecryptoverse.com, where you can, of course, find access to the risk metrics that we're going to talk about in this video. Now, the risk metrics for various cryptocurrencies is something we talk about somewhat frequently on this channel, but I like to go through it every few months, specifically the one for Bitcoin based on all these different metrics, just because I think it's quite useful to understand sort of the overall risk in the market. You can see that we have a summary risk, a price risk, on-chain risk, and social risk. And now the summary risk is just the average of these three. If we were to go ahead and pull up the summary risk, this is what it looks like. And basically, you should know that it just goes from 0 to 1 as we've normalized this metric. You can see that the constituents of this metric include the Bitcoin risk metric, which is another Bitcoin price-specific risk metric that depends nothing on the social risk or the on-chain risk. We have the total market cap risk, logarithmic regression risk, market cap regression risk of the entire asset class, a corridor that I created, the fear and greed index, the MVRV Z-score, the Pure multiple, the MVRV score, the minor cap to thermal cap ratio, transaction fees, market cap to thermal cap ratio, terminal price, and then YouTube subs, YouTube views, Twitter analysts, Twitter exchanges, and Twitter layer ones. Okay, so there's like exchanges on Twitter and layer ones on Twitter and then followers to those accounts. And when you account for all of that and you normalize all prior activity between 0 and 1 and account for diminishing returns, when you need to. Some metrics don't really need to account for diminishing returns because they just nicely oscillate between 0 and 1, while others sort of go to a higher base from one cycle to another. But once you do that, you get a metric that looks like this, okay? And it's quite fascinating because we tend to go from low risk to high risk and back again. And we just go through periods of euphoria and this time is different, to fear and feeling like crypto is dead. Okay. And this is a common occurrence. And I will note that we said this before, that the pre-halving year is notorious for something called time-based capitulation. Okay. Now, in the last cycle, we put in a higher low. Bitcoin put in a higher low last cycle. The cycle before that, it was a double bottom. Okay. But in both cases, the main aspect that really, was really hard for people was the time-based capitulation. It's when everyone's watching the charts and the price goes up and everyone YOLOs back in because of all the ETF news, and then it just goes back down the next day. And you rinse and repeat this brutal cycle for the entirety of the year, and by the end of it, most people are demoralized. But both bulls and bears are demoralized. And it's not just one side, right? Now, right now, I know a lot of people are more so, a lot of people who are bullish are probably getting, a little bit uncomfortable with the price action to the downside, just like a lot of the bears were uncomfortable with the price action to the upside. But as I've said all year, pre-halving years are notorious for getting the bears and the bulls both sufficiently wrecked, okay? If you wipe both sides out in the pre-halving year, then by the time you get to the halving year, there's a lot less of this, egregious leverage speculation, right? A lot of that stuff just gets flushed out. A lot of scams get flushed out, and it's sort of like we can start anew in the halving year. That's not to say there can't be downside volatility in the halving year. We know what happened in March of 2020, but it is to say that the bear market year and the pre-halving year function to remove the excess from the space. And it's not only important to get price-based capitulation, but you also want to get time-based capitulation. And what's interesting is when you look at this metric and we look at every individual risk metric, you'll see that the price risk and the on-chain risk have already gone to fairly low levels, right, in late 2022 and early 2023. And it was several months ago at the I think the first few days of January, I made a video on this risk metric, right? And in that video, I think Bitcoin was at 17K. I said, look, guys, over the long haul, the best strategy, in my own experience, is a DCA strategy, right? That's the best strategy according to the risk levels. So the idea is that, whatever risk metric you want to use, you DCA Bitcoin whenever it's below a certain risk. You stop DCAing it whenever it's, say, within a gray region, above the risk level that you're comfortable with, but below where you might want to start selling. And then above a certain risk level, the idea is you DCA out. Now, again, this is not financial advice. There is no right answer to this, right? There just isn't. There's some people that are going to be more comfortable DCAing up to, 0.8 risk, because they'll just say, well, to hell with it. They just want to DCA basically every single paycheck, and they only want to sell if we ever go up to like 0.9 risk. And maybe they only get the opportunity to sell some every 3 or 4 years. But that's what they do, okay? There's other people that say, well, you know what? They only want to buy up to 0.2 risk, right? There's nothing wrong with that. There's this tendency for a lot of people to sort of dunk on other people if they're not buying or if they're not selling. But again, crypto is a personal journey. What's right for you is probably not right for someone else. What's right for someone in their early 20s who's perhaps looking to go into wealth creation mode is probably very different from someone who is in, say, wealth preservation mode. Okay, so someone that just wants to preserve their gains from a prior cycle, they're probably going to be more conservative than someone who's just getting into crypto and then wants to create that wealth. Okay, so we must understand that there is a difference between what is right for you and what is right for someone else watching this video and what is right for me, right? So for everyone, what I would encourage them to do if they're looking to navigate crypto is figure out something. It doesn't have to be this risk metric. You can come up with anything, right? There's tons of metrics out there that you can look at, but come up with something, right? And use that and say, you know what? No matter what the news headlines are, no matter what I hear about spot ETFs or what I hear about, a recession, whatever I hear about X, Y, or Z, the idea is you don't care about any of that stuff. All you care about is what is the risk level? That's what you care about. Because at the end of the day, in my opinion, that's mostly what matters. That's basically the only thing that matters is what is the risk level. A lot of times people will say, well, you thought Bitcoin was going to go down, or you thought Bitcoin was going to go up, and it did the opposite. Just because I have an opinion about where it might go in the short term doesn't necessarily mean I'm not DCAing, or doesn't mean I am DCAing, right? I'm allowed to have an outlook on the market, but that doesn't necessarily mean I'm basing my entire strategy on that single outlook, okay? So we need to understand that there's a sort of a difference between, what someone might suggest is a likely outcome versus how they're preparing for that outcome. It is often foolish to think that any of us know exactly what the market's going to do. Okay, so just because you think doesn't mean that you're going to be right, and oftentimes hedging for being wrong about something is a worthwhile exercise. So in this case, you can see that the price risk and the on-chain risk went pretty low. They did not go as low as they did in last cycle or really the cycle before that or the cycle before that, but they got pretty close. But what's interesting is that the social risk, which we really only have data for going back to 2016, but the social risk did not get that low back in December of 2020. There were still a lot of people around. And that is what had really convinced me that the altcoin market, investing in the altcoin market, was still premature, because there was still just so many people that were in the process of capitulating. The reason I thought that is because the social risk was just continuing to put in mostly lower highs and lower lows. And as long as you can see people leaving the space, right, as long as you can see that in front of you, then it likely means that the altcoin market will continue to get hit hard and the altcoin reckoning will continue. That is what it generally means. So when you look at this chart and you look at the social risk, you can see that it just keeps putting in lower highs and lower lows. And if you're out there buying altcoins, and you have to constantly ask yourself, who's the marginal buyer if every single week there's fewer people that are even tuning into the Cryptoverse? That doesn't mean that it will go down forever. Liquidity will eventually return to the cryptoverse, in my opinion, right? I know a lot of people just sort of assume all sorts of things about me, right? But I'm not a Bitcoin maxi, and I actually do strongly believe in the future of the cryptoverse, despite what you might think. My my videos, despite their bearish undertones, especially with regards to the altcoin market, I still do see a bright future for crypto. But I just think that we have to go through this hard phase first, simply because of the macro conditions that we are dealing with. Even without the macro conditions, we also saw crypto go down in the second half of 2019 as well. And it was very demoralizing. Okay? We saw many altcoins put in new lows. It was a slow systematic bleed. It felt like crypto was just dead in the water, right? And then the halving year came, we went back to QE, and everything changed. I put forth the idea that eventually the social risk will bottom out, and eventually we will turn this ship back around, but it has not happened yet. When you combine the social risk with the price risk and the on-chain risk, this is what it currently looks like. So the total summary risk is 0.161. The lowest that this risk metric has gone was back over here in December at 0.117. Now, the interesting thing is that if Bitcoin were to double bottom at 15K, this would go down to the 0 to 0.1 risk band. The reason it wouldn't have last time it did that was because the social risk was too high. But now the social risk is low. So if the price were to drop and the price and the on-chain risk were to go down, which they would if the price were to drop, then this time the total summary risk would actually go to the lower risk band. You could have a lower low as well with Bitcoin, like that is a possibility. You could also have a higher low that would still put you in the lowest risk band. So we should be prepared for all outcomes. I will probably do a video at some point in the next few weeks trying to provide evidence for each of those outcomes and letting you figure out what you think is the most likely. But that is where we currently stand. The total risk is 0.161. And this is the lowest the risk has been since January. It's not the lowest the price has been, because this is based on the social risk as well. And the social risk really gives you more insight, I think, into the altcoin market than it does anything else. But the issue is that the Bitcoin price also depends on the altcoin market, because oftentimes liquidity from the altcoin market will make its way over to Bitcoin during the pre-halving year. So if people are leaving and they're no longer buying altcoins, and there's probably also fewer people converting those altcoins to Bitcoin. And so that is another reason. So I think when you look at this, it's not that hard to imagine that perhaps sometime late this year, early next year, we might find ourselves in that 0 to 0.1 risk band, which is where we tend to find ourselves every few years. And again, I mean, it could occur at Bitcoin prices of 13K, 14K, 15. I would even think that even 17 or 18K, you would see it, somewhere near these lows. So it all depends on just how aggressive the Fed's going to be and how far they're willing to raise interest rates before they finally feel the pressure to pivot back to QE. And I think that's ultimately what we're facing right now. Another more maybe aesthetically pleasing way to look at this is to color code the price. When you do that, you get a chart that looks like this. So this chart shows you the price of Bitcoin color coded by the total indicator risk. And what's interesting is you can also sort of just look at the lower risk bands and you can look at the higher risk bands and see that if you were to just follow something like this, it would probably work out over the long haul more than buying based on spot ETF news, right? That's the general idea. And if you were to only look at, say, the lowest risk band, that's what it looks like. Okay? There's no guarantee that we go to the lowest risk band each cycle. And remember, the only cycle that really included the social risk was the last one and this one. So these cycles over here didn't even include the social risk, but admittedly the social risk back then was probably basically nothing because no one really cared about crypto. But regardless, you can see that this is what the 0 to 0.1 risk band looks like for Bitcoin, right? We hit it here in 2011. We hit it in 2015. We hit it in 2018 and 2019. Why not hit it in 2023? We hit it in 2019. We hit it in 2015. Those are both pre-halving years as well. We're in a pre-halving year today. In fact, 2011 was a pre-halving year. It is a fact to say that in every pre-halving year, total indicator risk went to the 0 to 0.1 risk band. I will say that again. In every pre-halving year, in 2011, in 2015, in 2019, total indicator risk for Bitcoin, which includes price metrics and on-chain metrics and now social metrics, went to the 0 to 0.1 risk band every pre-halving year. Sometimes it occurred early in the pre-halving year. Sometimes we saw it even, still occurring later in the pre-halving year. Like you can see in 2015, we hit it in September. In 2011, we were hitting it in November and December and October. So it varies. But in every pre-halving year, the total indicator risk has gone to the 0 to 0.1 risk band. And we're currently at 0.161 risk right now. It would not take much more of a drop by Bitcoin to get you to the 0 to 0.1 risk band. And I would say that is a likely outcome that we will see this year. Now, if you highlight from 0 to 0.2 risk, you can see that we've already been hitting those risk bands. Okay, so it could be that someone said, hey, I want to use this risk metric to DCA Bitcoin up to 0.2 risk or something. And you can see that had you followed that strategy, you would have started DCAing Bitcoin, at around 17.5K. And then you would have stopped DCAing it, in April once we had these moves up to above 30K, right? You would have stopped and we've only just recently entered this risk band again. Okay. If you DCA this risk metric, or if you DCA Bitcoin below 0.3 risk, you can see what it would look like. Below 0.4, right? Let me hide the sort of the peaks here, right? This would be below 0.4. That's what it would look like. So you would essentially be fine with all the volatility that comes in here. But then whenever we get one of these parabolic moves, you say, all right, guys, this is, it's too rich for my blood. I'm getting out. Not even necessarily to say that you have to sell, right? It could just be, you've put enough money into Bitcoin and maybe it's time to go do something else with it, right? Maybe instead of throwing it into the Cryptoverse black box where oftentimes money goes and never comes out of because, again, people get greedy, you could use it for something else, right? So there is this idea as well. And, this is what it would look like to DCA up to 0.5 risk. So when you DCA up to 0.5 risk, you do at least, you stop before the sort of the mania phases. And DCAing up to 0.5 risk, anytime we go above that, it should be quite apparent that is, in fact, a mania phase. It is apparent that in pre-halving years, we do not tend to go above 0.5 risk in any sustained way in pre-halving years. So there's a lot of people that, after the bull market year, and once we get into the bear market year, they'll start DCAing below a certain risk level, let's call it 0.5, and they'll just DCA for the entirety of the pre-halving year, and they'll tune out the noise, right? They'll say, you know what, no one cares about what Ben has to say. Even if he's right about both bulls and bears getting wrecked, who cares, right? Who cares? They'll just wait. They'll DCA, they'll wait, and eventually it'll probably pay out. It'll probably work out, right? But again, you have to be patient. I mean, this stuff doesn't pan out overnight. So I think it's quite interesting to look at it, especially if you look at it like this, right? It's kind of a really interesting chart to look at, kind of see where the overall risk metric is, and to say that, again, every pre-halving year, total summary risk for Bitcoin went to the 0 to 0.1 risk band. Right now we're at 0.161. This is where we are. Just a few weeks ago, it was over 0.3 risk back in May, and now it just keeps on dropping. What I thought was really interesting recently was the social risk, because I think there is some evidence to suggest that we are now entering into the depression phase. The reason why I say that is because a lot of times when we saw these big drops earlier, we would get big spikes in the social risk, right? Like this big drop right here, the social risk went up, right? This drop right here, the social risk went up. This drop here, social risk went up. We just got a pretty sizable drop, but now the social risk isn't going up. It's just going down. That's curious, isn't it? That shows you that we are making progress in the cycle. We are making progress. The social risk is now going down, even when Bitcoin price is going down or up. People don't care anymore. Look what happened last cycle when we got to these levels, right? The social risk kept putting in lower highs and lower lows. And then here, Bitcoin started to go down. But social risk went down with it. Previously, there were times where social risk was going up when Bitcoin price was going down. But in this case, social risk went down when Bitcoin went down. Why do we care about that? The reason? Markets tend to bottom on apathy, not when people are tuning in to watch the train wreck. Okay? So that means that we are in what I think is the secondary scare. I don't think the secondary scare is over. I think it could take at least several weeks to play out, more likely several months. But that at the end of this secondary scare, which likely ends either in a recession or a recession scare, that is where we actually begin a real bull market that should have, some stronger legs to it. Remember the pre-halving year bull markets tend to be relatively lackluster. Like, it's not to say they don't accomplish anything. It's just they leave a lot to be desired, especially in the altcoin market. And a lot of people just end up losing money because they end up trying to trade both sides, and they just keep getting wrecked. So the markets tend to bottom on apathy. If you were to look at a 30-day moving average of the total indicator risk, you can see that the lowest it went last cycle was about 0.06. It's currently here at 0.129. So, as we get later on into this year, you're probably going to see this come down to that 0 to 0.1 wristband, which is really the cream of the crop, right, for Bitcoin, if you can see yourself there. The hard part oftentimes is just, especially when it comes to altcoins, just being patient, because it's so difficult for people to sort of sit around. And this is the social risk, by the way. It's so difficult for people to just sort of sit around and just wait for all this excess to be dropped out. Like, for the people that don't really care, or it's not even, maybe that's not even a fair assessment. Maybe they do care, but they just, they don't have the luxury to continue speculating dubiously on risky assets like cryptocurrencies, and they need to do other things with their money. As long as we're in this phase, the altcoin reckoning continues. But once we've started to put in some higher lows on the social risk, and we start to see it turn back around, I think then you can start to understand who the marginal buyer might be once QE returns, right? It's just, who's the marginal buyer? If you think about it, who's coming into crypto at the current time to buy your altcoins? When you can tell that YouTube views are going down, you can tell that all this stuff's going down. Again, this stuff is likely going to turn around eventually. It's just a matter of time. So to just sort of summarize, the total indicator, so the total summary risk for Bitcoin is currently at 0.161. And this is based on, a lot of different indicators. We got a lot of price metric indicators, on-chain metric indicators. The cool thing about this is, if you think that one of these is useless, well, you can turn it off. You can say, well, I don't really care about the on-chain risk. The great thing is, you can turn it off, and it will adjust the risk metric for you, and it'll show you where it is if you turn it off. If you turn off, say, the price risk, it'll show you where it is, right? The on-chain risk is, has actually been relatively high recently. And, just to sort of go show you where it currently is, some of the reasons why it's high, right? You can see that it's at 0.231. One of the reasons it was so high is because of things like, the Pure multiple risk has gone up a lot. Transaction fees risk went up a lot, but it is starting to finally come back down. So some of these things went up quite a lot. Like, transaction fees risk went all the way up to the 0.9 wristband, near the highs. And a lot of times when this one goes up to that level, it tends to mark the highs. This time hasn't been any different so far. So just something to think about. I think that, using risk metrics to navigate crypto is probably a better way to go about it. It's not financial advice. None of these risk metrics are perfect. They're not going to tell you, they're not going to identify the peak identically. They're not. In 2021, you can see that this initial pump, so this is where I sold most of my Bitcoin, right? And this is what I published in ITC Premium, that I'd sold most of it in this first peak. I then accumulated some more down in the summer lull because I thought it was going to go down. The secondary peak on this did not go up as high, and it took me a couple months to really come to terms with that, admittedly, right? We do not, I'm not under the illusion that I get everything right. But at the end of the day, the idea in pre-halving years and even the halving years is when you DCA Bitcoin at some of these lower risk levels, that's not to promise that the higher risk levels will ever return, but it's to say that, you know what, if it does return, you'll be there to sort of take advantage of it, right? So I sort of sense that that time is coming relatively soon, especially as we get into the back half of 2023. Just to note, I started my YouTube channel in the second half of 2020 or 2019 because I identified what I thought was the secondary scare coming, right? So like I thought we were going into a secondary scare. I thought that it would set up a lot of great opportunities on altcoins, and I thought that then Bitcoin would rally, right, after the halving. That's what I thought. I sense the same thing is likely going to happen again. I think we are going into that. We're in the secondary scare right now. I think it's going to last a few more months, probably at least a few more weeks, probably a few more months. If it's only a few weeks, it probably just means there's some type of massive capitulation in stocks or something, right? If there's a massive capitulation in stock market in September, October or something, then it could be over sooner. But if it's just sort of a slow grind where maybe stocks even go up and they rally until a recession gets here, then it could still be a slow grind here in the Cryptoverse. So if you've made it this far, I would encourage you to just stay tuned. Let's see what happens here with Bitcoin over the next few months, and I imagine we'll find ourselves in some of these lower risk bands. If you guys like the content, make sure you subscribe to the channel, give the video a thumbs up, and again, check out the sale on Into the Cryptoverse Premium at intothecryptoverse.com. Links in the description below. And of course, you can find access to the charts like the one that you see here. We'll wrap it up there. Thank you guys for tuning in, and I'll see you next time. Bye.